welcome back to the video, guys. In today's video we're going to be talking about moving averages and how do they work in Forex. This is a really detailed and intensive course, and I've picked out the key parts of the key aspects that I've been using myself, that my students have been using, and hopefully by the end of this video you will learn something new about moving averages and you will be able to apply them much better compared to how you've been applying them previously, and hopefully it will help you with your trading as well. To begin with, guys, I'm going to start with a disclaimer, and I would also like to request you guys to like and this video and subscribe to my channel for more future videos. So let's get started. First thing first, guys, I've put on a disclaimer here for you guys to read. Once you've read the disclaimer, please continue with the video. Okay, so I'm hoping that you guys have read the disclaimer by now, so let's get started. So what are moving averages? Moving averages, in other words, just to simplify it, they're basically statistical data or a calculation of price that's been happening over a certain period. For example, a 10 days period, you will have a 10 moving average. For 50 days period, you will have a 50-day moving average. And for longer term period, like the 144 day period, you will have a 144 days moving average. So basically it's like a line that comes up on the chart, like I've shown it here at the background as well, so it looks very similar to that. So that's a moving average, and I'll be showing you more examples as well. And the whole point of moving average is to help you identify the trend. So we trade in the direction of the moving average. That's the rule that you guys need to remember. And obviously we trade if the price is, for instance, if the price is above moving average, we'll be looking to buys. If it's below moving average, we'll be looking to sell, and if it's stuck within the moving averages, then that's most likely eventful to be in a range. So we don't really trade the range market, and hopefully by the end of this course you guys will have a better understanding of moving averages and how everything works. So the whole purpose of this video was to give you a better understanding. So to begin with, like I said, guys, they are in days. So there's 10 days moving average, 50 days moving average, 144 days moving average, and I like to use all three of them. I don't like using 5 or 6 moving averages because it gets a bit confusing. So I would also recommend you guys to use the 10, the 50, or you can use the 144 or 200. So out of these two big moving averages, for example, the 144 or the 200, you can use whichever one you prefer. I use the 144, but 200 works great as well. So I would recommend you guys as starters to use the 10, the 50, and the 144 or the 200, between them two, whichever you prefer is the right one for you. So there's types of moving averages, guys. The simple moving average, there's an exceptional moving average, there's weighted moving average, and there's also smooth moving average. But these two at the top, guys, they work the best for me. So simple moving average, close, an exceptional moving average, and close setting as well, or you can have it as HL2, but close works really good and it's more accurate, and I'll be showing you the settings in a minute as well. So how we can set them up and everything else. It's quite simple, guys. So if you're enjoying the content I'm providing, please like, comment and subscribe to my YouTube channel for more videos. Thank you. The importance of moving average is, again, moving averages, they can help traders with buy and sell signals. They can help them to identify support and resistance as well. They can also, in other words, they can provide useful information for the direction and for the strength of whether the trends are about to continue or whether the trends are going to reverse. So moving averages, they play a whole big part in my trading as well, and hopefully they'll be playing part in your trading if you haven't used them. And if you have been using them and you haven't found success with them, then hopefully after this video you'll be able to make some alterations and you'll be able to use them accurately, and hopefully that will help with your trading as well. So there's various ways that they can help the traders, like I was saying, guys. So they can help us trend indicators. So like if the price is above moving averages, we'll be looking to buy. If the price is below the moving averages, we'll be looking to sell. So it's quite simple that we understand this. So above is buy and below is sell. Again, they can act as support and resistance as well. So let's just say if the price comes all the way down and it bounces off the moving averages and it goes up, then it acts as support. If the price is hovering up like this and there's the moving average and it goes to the moving average and it bounces down, then it can act like resistance. So you know, they can act like a key level for you guys as well, you know, for the price. And then you know, you can see from there if the price is actually respecting the moving average and it's not respecting the moving average. The crossover strategy, guys, I'll be showing you that as well. So basically, where there's two types of crossovers, there's a bullish crossover and there's a bearish crossover. Bullish crossover is, you know, they call it the golden cross, and as you know, bullish is going up, so we'll be looking to buys. And the death crossover is the bearish crossover, so we'll be looking to sell when that happens, guys. So like the instance here, we've had a bullish crossover here and we've had a bullish crossover here, and as you can see, the price has gone up from there, so we're looking for buys, and the price is also following the structure as well, which is really good. So the single moving average strategy is if you have just one single moving average. I like to use dual moving average crossover like I've shown you here. With multiple moving averages, the probability is much higher, and if they're all lined up, so let's just say the 10 is above the 50 and the 50 is above the 200 or 144, so this is a really good signal for you guys to see that, you know, the trend is actually upwards and the moving average is suggesting for you to buy. And again, you need to find entry points and you need to use proper risk management. So with moving averages, it can help you identify the direction of trend. There's triple moving average crossover as well. So like here we've had 1, 2, 3. Again, it really helps. So I like to use 2 or 3 moving averages, mainly 3, and it's really important that you guys do that as well. And moving averages, and they're used in Bollinger Bands and they also used in MACD as well. So I've got a video on my YouTube channel going in a lot of detail in both of these. So I've got one that says Bollinger Bands and I've got another one that says MACD, and they're quite useful as well, guys. If you want to watch them after this video, they will hopefully help with your trading and you guys will learn something new. So limitations and considerations with moving averages, guys, they're based on past price data, so they can be a bit lagging and they can be a bit behind the current price, so you need to understand that. Sometimes they can also give you false signals. Like I was saying, if moving average is stuck within the price, don't fall for that trap, guys, because that's range. So we need to have them clear, like I was showing you before. This is clear, but that's like a range like that, guys. You need to avoid that at all costs. When the price is clear and it's going upwards, then you can look for buys. And again, we don't trade ranges, we're trading clear movement. And like here, as you can see, moving average was about to give us a false signals of a death cross, so it's going downwards, but then the price went up. So this is really important that you guys understand this. Also, they work best in trending markets, so markets with strong trends, for example an uptrend or a downtrend. But in ranging markets, they'll give you false signals, so you need to understand that, guys. So here is an example I've provided for a ranging market. So as you can see, in ranging market, you don't know what the price is doing. It's going up, it's going down, so we will not avoid that. So we need to wait for the price to open up a little bit like this, or even like this. And then obviously once we get a crossover, so we've had a crossover there of a moving average, that's a death crossover, and as you can see, the price has gone down from there and it followed the whole structure. So it's quite important that you guys know the difference between the death crossover, which is going down, and the bullish crossover, which was going up in the previous example. So these are my settings, guys. You can go on trading view and you can search for in the indicator part, you can type in moving averages. Once you select moving averages, you will see moving averages ribbon. You go on the moving average ribbon, you select the type of moving average. So I like to select the EMA, or I like to select the SMA, so you guys can see both of them, which one works better for you. And I also like to use the setting close, and I also like to use the setting HL2. So again, they both work great, but I found that EMA and HL2 works greater than SMA and close. But I would let you guys figure out which one's the best for you, and hopefully you will be able to see that. And I would recommend you guys to use the 10, the 50 in my opinion. You can use the 144 as well, or the 200, but as you can see, I've chosen the 144, but 200 works great as well. 200 is a 200-day moving average, 50 is a 50 moving day moving average, and 10 is the 10-day moving average. So you know, this is how they work, guys. Again, we can trade with price crossovers. They can be a bullish signal when the price crosses above the moving average. It could be a bearish signal when the price crosses below the moving average. So like I was saying, guys, so the 50 period crosses over the 200 period upwards, meaning it could be a golden cross, meaning it could be a buy. And the death cross is obviously if the moving average crosses below the moving average, and then that becomes as a death cross, meaning it is a sell, like I've shown you an example before. And again, guys, just to remind you, they can act as support and resistance level, and this is something that you guys will need to be really careful of, because support and resistance in moving average is not like the usual support and resistance. The usual support and resistance, like the lines and the zones, they work a lot better. Guys, I've also made a video on support and resistance that you would really enjoy, so please go on my channel and watch that as well. And please like and subscribe to my channel for future videos, and it will be really helpful for you guys to you'll learn a lot, and you will see different types of things from my perspective with years of experience. And I'm here giving you this knowledge for free, guys. There's people that are out there charging thousands and thousands for knowledge that's not even equivalent to mine. So I would suggest to you guys to by go through my videos and find the more relevant ones to watch, and hopefully you will learn something new. So again, guys, the conclusion is by learning moving average, or by understanding moving averages, traders can gain edge, but it's not guaranteed. Again, they can offer you valuable insights and potential reversals or trend, where the trend is as well, but again, there's no 100% guarantee, guys. So I would really thank you so much for watching, guys, and I will see you in the next one.